Rates are at 5.2%. That's the highest since 2012. Matter of fact, today we are 2% points higher in our interest rates than we were a year ago. Well, how high can they go? Larry Gonzales here, senior loan officer, sales manager, and I don't know. I do a lot of different things and I love doing what I do. Before I go on though, like, subscribe, comment. I love the feedback that I get from you guys. I really do, because it helps me figure out what my content's gonna be moving forward. I like a little back and forth. So here we go. Talk about some of the things that shape the rate market this week. Fed members are speaking. Fed Chief Buller, he is a bull in a china shop. He came out this week and said that the Fed needs to raise the Fed funds rate by 75 basis points at the next meeting. And then we need to get to 3.5% by the end of the year. That's crazy. But why are they doing that? Because they're so concerned about inflation, and nothing they have done to this point has stopped inflation. You know what? We are that instant gratification society, right? We put our popcorn in the microwave for 3 minutes and then we're staring at it for at minute 2 thinking, come on, hurry up. All right, we have no patience. All right, the 25 basis point hike, not enough. Bullard's like kind of antsy, wants to get her done, and he wants those basis points added ASAP. There are others, all right, Fed Chair Bostic saying, you know what, dude, if we do that, we're gonna kill the economy, and we cannot kill our economy. All right, we've got a lot of other issues right now, all right, raising the Fed funds rate and just stopping our economy in its tracks is not the way to go. These guys are all over the place. And let me tell you what, Bullard talk, man, interest rates, man, they took it on the chin yesterday. It was an ugly day. Actually, it was on Tuesday. World Bank, all right, they came out, their global growth forecast. All right, initially they projected 4.1, they've dropped it now to 3.2. All right, reasons being slowdown, stagnation in Europe and Central Asia. You think about what's going on, you got Russia, Ukraine, huge reason, right? This ain't ending. As a matter of fact, Russia just started their offensive in the industrial area of Ukraine, and you know that is not going away. That war is not going away anytime soon. It seems to be, you know, getting worse. And it's aligning more countries with Ukraine, all right, against Russia. China is still on shutdown. So those things are gonna cause a slowdown. You know, food prices are high, fuel prices are high. That ain't changing. So we got those things that are affecting the world economy. You also had National Association of Home Builders this week, all right? It's kind of funny. You see the news and everyone interprets it a little differently. All right, the sentiment dropped for the 4th month in a row for National Association of Home Builders. If you take it at that level, you think, oh my God, the housing market, it's gonna crash. But it dropped from 79 to 77. All right, it had been in the 80s most of last year. But you know what? Anything above 50 is positive. So yeah, sentiment's a little down. Okay, but that doesn't mean it's bad. All right, why is it down? Well, it's down because of supply chain, and it's down because of interest rates. It's not down because people don't want to buy. People still want to buy, all right? The Freddie Mac, one of the government service enterprises, just came out this week and said, hey, we're fully 3.8 million homes short of what we need to meet the market demand. And we're not gonna get there this year. So we got that going on. There's, you know, the reason, you know, we have these issues, it's an imbalance, right? It's a big imbalance between supply, demand, all right, and really just the lack of inventory. All right, we had another big report come out this week, all right? Inventory. All right, inventory of homes, the existing home sales report. And this is for homes that closed in March. All right, if you closed a home in March, that means you went into contract in January and February. Interest rates took their first big jump during those 2 months. All right, so inventory was up, actually 12%. All right, but you know what? Inventory always picks up going in March, right? It's a sine curve, all right? It dips, you know, December, January, February, and then it shoots back up March, April, May, and through the summer, because that's when people are moving. Homes on the market, all right? 17 days, all right, this is across the nation. In Hawaii, just to show you the difference, days on market is less than 10, all right? That's for single family homes and for condos. So inventory is still low. 2 months of inventory, all right, for homes across the nation. What that means is if no more homes came on the market, it would take 2 months to sell all the homes that are on the market. We've been under 1 month of inventory for the last 2 years in Hawaii. So we have half the inventory that we do in the mainland. So another thing that shows the imbalance of supply and demand. All right, it's not like people don't want to buy, they just ain't no home. So who's buying? Well, almost a third of all home buyers right now are first-time home buyers. All right, that's a lot, 30%. Okay, that's up from last month. Here's the other one, cash buyers. Cash buyers, 28% of all purchases in March were cash buyers. A lot of people with a lot of money buying homes right now. All right, investors, those numbers actually dropped a little bit. We're in the high teens, we're at about 18% investors. And what is it? Why is it? Well, you know what happened? All right, FHFA, they just mandated that basically up to 4% fee on all second home and investment home purchases. So really people who are buying homes as investment properties or second homes, they really got to be serious because they're going to be paying some money, all right, to buy those homes. So that's kind of what you got going on. Median home sales, 15% rise, highest, all right, year over year since like 1968 or something like that. It's pretty high, 15%, all right, in this month. That's pretty high. So just a lot of information in this existing home sales report. Rates, the NBA reported that rates are at 5.2%. That's the highest since 2012. Matter of fact, today we are 2% points higher in our interest rates than we were a year ago. Well, how high can they go? All right, yeah, inflation out of control. It's gonna take some time, but how high are interest rates going to go? All right, gosh, you know what? They've risen so fast, I think there might be a little bit of room for them to come down a little bit, and they'll start coming back up. I think we're just gonna be doing a sine curve, but a sine curve that is going up over time. So, you know, I think at the beginning of the year, I was thinking probably around 4% would be, you know, in the fours, and maybe the fives is it, all right? Last time we had 5% as interest rate, that was like 2018, market started slow, but home prices, guess what? They were still going up, all right? Just not as fast as they are. All right, let's talk about what all this means to you, all right? I talked about prices going up, all right? We're still, you know, record appreciation, but here's what I'm seeing. All right, and I just put this out to all of my pre-approved and looking and my referral partners. I had a couple people asking me to put out word on their homes. One is you know, just kind of sitting on the market. The other one, people just dropped the price. And these are on more expensive homes. We're talking like 1.3, 1.2, 1.3. I have a friend who has a home, they're selling for 1.2 million. All right, second week on the market, no offers. All right, if we were still in a lower rate environment, I guarantee that home would have gone. All right, another client just dropped the price on their home on down to 1.3 million. All right, people aren't getting as many offers in, especially in the higher price ranges, because an interest rate, you know, at 5% on a $1.3 million home, that's a lot of money, okay? Whereas a 5% interest rate, yeah, it's a lot of money on a $400,000 or $500,000 home, but it's not as impactful as it is on those higher price homes. I think the rates are getting so high that it's, you know, people are going to come back to earth. Does that mean home prices are going to depreciate? No. I got prices up, but you know what? They're going to slow down. All right, inventory up, getting better. Rates up. Expect to ride that roller coaster, baby. Put on that seatbelt. All right, nobody falling out of this roller coaster, not with me. All right, that's all I got for you. Hope you have a great week. Have an awesome weekend, and now let's enjoy paradise. All right, aloha.